Good afternoon. Good afternoon, everyone. And we are punching up spontaneously. You'll have to let us know too, and I'll ask this maybe a few more times as we might get some folks popping by, if we are titling our videos correctly, and are you able to distinguish between something that is historical versus something that is currently alive? You have to let us know. I've asked Susan to take a peek at that with a critical eye. Right now, it is April 15th, tax day, tax day here in the US, and at about 2:22. And looks like maybe they're going to be cashing some chits with some chips, and pay the tax man. And let's give you a view here. Let's pull this up and make sure that we got everything on that we need to. We're very, very close to pulling the plug on Zoom and getting completely over to StreamYard. Got a few more things that we've got to vet out. But I'm hoping that the image is better. If you set it at 1080p, we should be broadcasting in 1080p. Let's go take a peek at what's happening right here, right now, and what we see and what we think is about to happen. So let's go highlight a few things. Maybe I should. I think I just did retweet it out. That's why everyone's got to push those notification buttons. All right, so we're going to come here and let me do this. So the VIX is going along right here. Oops, that's not the right color. We're going to get green, and we are long right here at 115. 115. The ES goes short right here at 1255. The NQ is going short right here at 1 o'clock, 5 minutes. The YM is going short at 1255. And the Russell went short at 1 o'clock. 1,000, 2,000, $3,000 in available profits. You could be in and out of here in 15 to 20 minutes. Or you could be sticking around like us. And we are going to stick around. We do think that maybe this bugger is going to turn down. We got gold hanging in there. Gold's not backing off one iota. We're keeping a view on the interest rate, on the 10-year interest rate. We're jammed at 4.318. Somebody, whoever that somebody is, that somebody, could be keeping their thumb on those rates. Those rates get up above 4.5 anytime soon, and I think they might. Stocks are in a whole world of hurt. They are just in a whole world of hurt. But if they do, but please do not let me influence you. Do not let anyone influence you to do anything with your money or with your portfolio. Don't make knee-jerk decisions, reactions to anyone. If you have a managed portfolio, you need to manage it, and you should have plenty of time, and you shouldn't be making quick, fast, haphazard decisions on a managed portfolio. I just want you to know. Now, when we're trading intraday, it may look chaotic to you, but we're very measured, we're very disciplined, we're very patient, and we're making very precise surgical steps to extract cash flow on any given day. Managing a portfolio is very, very different. Right now, you can use the same tools, but you just don't want to make those decisions too fast. And you don't want to be influenced with the noise of a particular day, whether that noise is up or down. I just hope everyone understands that. So we'll just remind everybody. And What else do we see here? We got the yen. The yen is a position trade for us. We have more than one. I won't say how many, but more than one futures contract on the yen that we got long below 65 cents. And we could be in those trades for, I hope, weeks, months, maybe longer. We're holding the yen long. So we do draw a distinction between intra-day trading, intraday, which can be still relatively slow. Notice how the volatility has come in, though, right? It has come in, and but low volatility, high volatility begets low volatility, and low volatility begets high volatility. It's like an accordion: expands, contracts, expands, contracts constantly, and because we just don't go from a highly volatile environment to a narrow one. We just it's just not normal. And we won't go from a real narrow, low volatile to a rapidly high, rapid inflation unless there's some sort of catastrophic event that the market wasn't ready for. And this expansion of volatility was gradual, and then it expanded rather quickly, but it was not unforeseen, and it was not without its markers. There was plenty of time. I mean, there was weeks of time to get ready if you know what you're looking for. Did you see the video? It's kind of interesting. There was a pretty hefty earthquake, I guess, the other day in San Diego. And did you see they had the animal cam in the San Diego Zoo, and how the elephants are such, the beautiful creatures, right? So brilliant, so smart. And if you haven't seen it, you can Google it. And the elephants immediately, they were in their enclosure. They're in an enclosure, large, and they came from the far corners of the enclosure, and they all took up positions in a circle, like circling the wagons, facing outward, facing outward. Something's not right here. The ground under our feet is shaking. Something's wrong, and they immediately took steps to protect themselves, protect the youngsters, and to protect themselves. And everyone was looking out and hunkered down. May have felt like some sort of big animal or something was, shaking the ground floor to them. Um, they will do the same thing when they live in areas that are prone to tsunamis, right? The elephants will climb the hills and go to high ground before the wave. That's what they did in the tsunami of Thailand. How is it they know that, right? It's instinctual, but I think it's passed down from generation to generation. You know, um, these market moves we're having right now are I can just tell you because I've been through them before. Person can choose to decide to do whatever it is they want, but this is not the start of a new bull market, folks. It isn't. It isn't. This is not how a new bull market acts. This is, in my view, from previous experience, the death of a bull market. This is how they come to end. Not in a day, not in a week, but you'll get these breaks. Then the noise picks up. And the retail crowd, what they're doing, they don't know what to do, quite frankly. They don't even know why they're in the market. They're in the market primarily because the interest rate structure was closed down on them, and they were forced into the pen. They were forced in. Remember, there was no other place, Tina. That was the acronym. There is no other alternative to get a return on their money, because the Federal Reserve, thank you very much, was penalizing savers and producers, and so you know the drill. So they're all in. Everyone's in. Everyone's in the pen. Not everyone, but many of them. And they don't know exactly how they get in here. They don't really know why. Some of them have never experienced. They're too young. They didn't experience the 2008. They didn't experience the dot-com. They didn't experience the Thai baht crisis. They didn't experience the Russian ruble crisis. They didn't experience any of that. Or the 80s, God knows the 87 crash. They have no experience. So all they can do is react to fear, and which is never a good emotion. But these are the death throes of the bull. There's no doubt in my mind. None. None. She's dying. Now, it may take months, but folks will look back on this, and I do have empathy. I absolutely do. Um, when a person looks at their retirement account, especially if they are 50 years old, they look at their retirement account. Maybe they had $1 million in there, and today they got 800,000, and they lost 200 grand. It hurts. Now they may not have planned on spending it, probably not, but probably, But then the anxiety, the uncertainty. Well, maybe it'll get back there, and then I'll sell it then. Be careful with that emotion. That's driven from greed. It's driven purely from the money. Our experience is that you'll see a bounce, and the persons will breathe a sigh of relief, and their account in round numbers might go back up to, in round numbers, I'm just picking a round number, might go back up to 900,000, and they breathe, okay, I'm okay. Everything's fine. I did the right thing by doing nothing. And then, boom, they're down again. And this time, the account goes from 800,000 to 650. Uh-oh. Damn. I should have sold when I had 800, right? All that emotion. I should have done it then. I didn't do it. I can't do it now. If I do it now, I'm not going to lose just 200. I'm going to lose, 350. I can't do that. Can't do that. What do I do? I don't know. I'll watch this. I'll watch that. I'll watch Kramer. I'll watch that. And all of a sudden, they become a market junkie. They're reading anything and everything they can get their hands on. And they're trying to make a decision when the crisis is unfolding. And they got no experience. They therefore have no confidence. They hope and they wait. They maybe get a little bounce. Things quiet out. Trump comes out, says this, says that. This guy, okay, okay, we're gonna be okay. It'll be okay. I'm invested for the long term. Long term, buy and hold. And then, boom. Next thing you know, they break half the account, and they're down to 300, 350, and then they puke. And it's not obligated to go back up, but that's how bull markets, that's how bubbles unfold. And they usually trap the ones who got to the bubble, got to the oasis last. That's how they unfold. We don't make any decisions on money. We try extremely hard not to make any decisions around the emotions of fear and greed. Do I like it when we have a losing trade? No, I don't like it. Do I like it when we have a winning trade? Yes, I do. Do I attach a whole lot of meaning to it? No, I do not. I don't. Nope. Just another day at the office. Just another week. Just another month at the office. And the jackals are always, nipping at our heels. And who are the jackals? They're the media. They're the politicians. They're all of them. The Dave Portnoys of the world. Just adding the noise. Kind of glad as we've come down, they've kind of quieted down. That's when the next punch comes. We have been doing this a long time. This is not new to us. We've been doing this since '08. Well, '08. In earnest, '08. We started in the early 2000s. Really probably didn't turn the corner, felt as though we turned a corner until '08. And reason being is we're a little bit early prepping for the blow up of the bubble of '08. But we're doing this a long time. And you get to see it, hear it, feel it. It's very, very similar. So when those elephants, if I always wonder if I was in Thailand and I saw those elephants going I know now, I saw those elephants going to the hills. I think I would know what to do. I need to get into high ground. They know something I don't. When you see the big, big money in these markets getting out of the way, how do you know they're getting out of the way? When we were reporting back in January that the skew was at 182, well, that was a marker that the big, big financial elephants, the Warren Buffetts, they were getting out of harm's way. They were getting their bread out of harm's way. That's it. And you can either trust those signals and trust those instincts. It's part of nature. I guess what earthquakes and tsunamis are to nature and to the animals of the jungle. The markets are a jungle, and when we see what we see, we trust our natural market instincts and these algos to tell us that we need to get out of harm's way, and everything is not okay here. The high on the S&P was 6150, 6200. We came all the way down below 5,000. We should have really bounced up to about 5,800, and she can't make it. Can't make it. So it's rather shallow bounce here. The next move might take us down to 41, 4200. It might. And then if the rest of the crowd they panic down there, we go even much lower. So just know that. Just know where you are. Now, if the money in the in your portfolios is money that you can afford to lose and it's just mad money, it doesn't matter, then yeah, don't worry about it. It's not going to do any good to worry about it anyways, but you can just leave it alone. If you're 25 or 30 years old, yeah, you probably, you have time on your side. But if you're, 45, 50 in there, 30s, you got some time. But 45, 50 and you want to, you want to reduce your travel, reduce the conference calls, reduce the number of bosses you got to report to, or the number of people you have under you. Um, you better be paying attention and always keeping your left hand high. Make sense? All right, we're gonna let you watch. I'm not gonna ramble on, but if you haven't seen the video of the San Diego Zoo, do see. On the ground started to shake. It was pretty cool, and the elephants, like I say, just kind of made a circle. They circled the wagons, looking out, protecting the herd. Protect, protect, protect. I think too many retail traders give too much focus on, how much am I going to make? How much am I going to make? What can I make? What can I make? How much am I making today? How much am I making right now? Um, Equally, how much am I losing? How much can I afford to lose? I can't afford to lose anything. If you can't afford to lose anything, then you can't play the game because you can't do this without a drawdowns. And how do you react? How do you react? It's kind of funny because it's run the gamut. Um, we have had folks that financially, it probably didn't matter. But they just, um, you know, losing money, whether it be 200 or $300, was just painful, painful. And they were well in a position to fully afford it. It would be like losing $30 to another person, right? Um, and then equally, we have other folks that, is just, fearless. I think it's got to be hopefully somewhere in between, in between. And when you're a business person and you're running a business, if it's a plumbing supply store, if it's a travel agent, I don't know, do they have travel agencies anymore? A Subway store, some sort of business, you know, um, you're not always gonna have, when there are gonna be good days and they're gonna be soft days. You just don't want any negative outlier days, and you want to be able to generate revenue, and hopefully profits over time. And then that, as traders, that's what we need to do. This time last week, the markets were flying, right? They were flying. They may have blown some people out. I hope they didn't. At least not you guys, not the folks that have been listening to us. I hope they didn't. And we said even back then, one, reduce your trading immediately. Two, reduce the margin. Boom, knock it right down. Don't wait for the brokerages to do it. Do it yourself, and or unplug. Just wait for it to calm down. The trading right now, we're right back to nirvana. Margin requirements are a little bit higher than normal because, even the brokerages know that this isn't quite over yet. Not over yet. Doesn't work that way. It takes some time. Make sense? All right. I'm not going to ramble on. Any questions, you let us know. And we're getting some work behind the scenes done and getting in position. We do have this is a shortened week. This is a holiday week. And Wall Streeters will take the week off before. So many of them are off this week, and many of them are going to be off next week. It's just the way they are. But Friday is Good Friday and Easter weekend. And so I don't think, well, I know the banks are closed on Friday. I think the markets will probably be closed, maybe a half day with futures, but it'll be light. Do we see a little break starting today? And, maybe Wednesday into a Thursday to get out of, well, probably Wednesday to get out of harm's way. Maybe. Historically, this week is generally up a very high percentage of the time. But this is a little bit unusual because of what happened here in the last month, and then the bounce in this market may just limp into the long weekend. We'll see. We're going to let you watch. Any questions, let us know. Good afternoon, folks. And we are holding short into the evening. And we're going to see if we can try to take this down overnight. We think the markets, especially we're looking at the Nasdaq in particular, but we're still in earnings watch too. So you got to be careful about the closed overnight session. Any kind of earnings come in, we're in that season. But we're thinking the Nasdaq's having a real hard time trying to hold this 19.1, 19.2 area. So we got a couple hundred points to work with here and see if we can kind of take it down. Let us know if you got any questions, and we wish you the best.